Corporate in India and the earnings from corporate in India continue to pour in. Bajaj Finance results are just out. Mohit, continue to be with us. Suyash, quickly run us through the numbers.
So Shweta, the numbers look robust, although on the profitability front, the numbers are slightly below the street's expectations. Now, net profit for the quarter stands at around 3,550 crores, whereas in the Q2 of FY23, it was at about 2,781 crores. So we have seen a 27.8% year-on-year rise in net profits from Bajaj Finance in the previous quarter. Now, net interest income, which is a difference between the income earned and the interest earned and interest expended, stood at about 8,841 crore in September quarter versus 6,997 crore in the year ago quarter. So this is a 26.4% year-on-year jump in net interest income. More numbers, Shweta, are awaited. I think the numbers have just started trickling in. So I'm just looking at the first draft that is available. Bajaj Finance stock also, Shweta, ended about 0.9% higher. In the last month or so, the stock has gained about 7%. Year to date, it is up about 25%. Outperforming both the benchmark Sensex and Nifty. I mean, Mohit, I know you must have not gotten enough time to look at the numbers, but what's your first reaction from the results of Bajaj Finance?
Honestly, I think the print, as you rightly said, is a little below, tad below Street's expectation. I think Street was expecting a 30% rise on the profitability front, but I think 27.8 is a very, very robust number, which is what I see on your screen. And honestly, I think it's all falling in place for them. They have just recently launched their new AMC, which has mopped up good AUM in the recently launched NFOs. They're planning to raise more capital. They are actually bracing up for the challenge which perhaps a Geo Financial Services will pose to them. Though their margins have shrunk a little because of the capital cost and everything, but I still think it's a long-term bet and should be a part of investors' core portfolio. And I continue to believe that they're doing fantastically well out there.
Now, Mohit, as you rightly pointed out, margins was expected to be a concern this quarter given the higher cost of funds. The numbers are not out yet, but the expectation is that the net interest margin will compress by about 30 basis points on a year-on-year basis and come in at around 10.2% versus 10.5% year ago. What are your projections, Mohit? Similar sort of numbers you are also expecting from Bajaj Finance?
Yeah, look, I think margins should compress, Suyash. Degree and magnitude obviously will come out once we read the results in greater depth and detail. But my sense is yes, whatever numbers you were quoting, 10.2 to 10.5 is the range. It should somewhere hover around that range itself. And they are a tad lower, but I think that's all baked into the price. That's all baked into the stock. They are out there raising capital, which they don't need perhaps. But I think it's more of war chest, which they're trying and building up, and which also shows the ambition of the whole group. I think that's what the market is kind of liking it. Honestly, I think they're showing that audacity of ambition. They want to go all out, take it head on with perhaps Geo Finance, and want to continue to be the market leader, right? And preparing for that, I think it's never bad.
Now, Mohit, any short-term view on the stock? I mean, we are seeing the brokerage views coming
mostly
in.
bullish.
Mostly bullish. Morgan Stanley, in fact, has a 10,500 target price on the stock, implying an upside of about 30% from today's close. For Jefferies, it is a top pick in the NBFC segment. Citi, however, is neutral. What's your take on the stock, sir?
City, honestly, I think I've read the report from which cities put out on this one. I think they're not very bullish on the rural consumption and the rural credit part of this entire thing, and that's where they continue to remain neutral. If whatever I understand little of that report, but otherwise, I honestly believe, as I told you, it's more a strategic in the core portfolio of an investor. It should be obviously a long-term holding. Short-term, you can never predict which way the market honestly goes. It's more liquidity and emotion driven, but in on the long term charts, I think this is a fairly robust script to hold, and this should be a part of any investor's core portfolio.